What's up, everybody? It's your girl Erica from the Classy Climb blog, back in the office in Texas with the cash flow hat on until we sail to the moon, y'all. Right now, I brought on Diamond Dave because I want to have that nuanced conversation, right? I can always talk about stuff in general, but I want you guys, if you haven't noticed, I've been bringing the conversation up on the channel. We just had an investor who pulled in 33 syndications, right? In 3 years. Because the money's out there, it's the mindset, right? So, Mr. Diamond Dave, please introduce yourself to the audience.
How are you doing? My name is David W. Williams, also known as Diamond Dave, founder of the highest paid part-time job in the world options trading program. And Eric, I'm really happy that you allowed me to come back on your platform. And I know that we're going to give a lot of value to your subs and really give them something to think about once they get off this show that they can add to their own life.
So what I love about YouTube and everything, and people are like, man, stay in your lane, mind your business. That's just it. We're in a culture where we tell people to specialize in one thing. And then when that one thing is no longer needed in our society, what has that person's life become? Right? Yeah, without it. It's like telling the coal miner be the best coal miner you could ever be. Even though we know coal mining is going the way, reduced jobs, right? Same thing. It's like telling the guy to be the best factory guy ever, but we know that industry is in a reduction, is in a decline. So I've been hesitant to talk about stocks because I don't want you guys to think I'm pumping on this channel or anything of that nature. That is not true. I have another stock YouTube channel that's just for stocks, and I'll just be kind of documenting my journey, and maybe Diamond Dave can do a show with me over there. But the part I want y'all to understand is when I talk about $30 trillion shifting in the next 8 years, this is part of what we're talking about. This whole GameStop, this whole AMC, all this stuff is a big changer. Now, many people say, well, Erica, AMC is going the way of the dodo bird too, because, everybody can watch movies from their house. I want you to know on this Saturday, I had to choose to come in here because everybody in Austin is outside. Right? You may say, well, the COVID's got people inside. No, there's a time limit on how much people are going to reduce themselves and stay in home and not try to mentally return to normal. So, Diamond Dave, give us some of your highlighted tips of this week that you thought were shocking, but we may need to start off with you kind of explaining what's happening to the Melvin Capitals, to the Britons, why they're losing approximately $10 to $17 billion at this current time.
Yeah, I mean, what we saw this weekend, it really was a culmination, and it's still not really over, of a lot of activity that's been going on, I want to say maybe the past 6 months to a year, where Melvin Capital, which is essentially what we would call like a big-time short seller, they had their position attacked by a lot of different people. But what the media really tried to focus on was what they would call the Reddit crowd. And they had their position attacked. And so that caused a lot of fuss, because what it did was it took a stock like GameStop that had probably been around $5 for a few years, maybe got into the teens, and then it started to really shoot up at a really rapid rate. And Melvin Capital was one of the firms that was shorting that position and was also doing something that we call naked shorts, which are very risky, very volatile. And they just got caught in a bad position. Their position got exposed. And so what we see as a result of companies like Melvin Capital having to cover that short, started putting a lot of fuel behind GameStop's share price. And then it started really rising out, and then people started to pay attention to it, and then they started adding on. So as more people started to add on, Melvin Capital got in a lot more trouble. The media started to really pay attention because everybody now has scanners. So when there's a lot of activity on a particular ticker, everybody knows about it, and everybody says, well, what's going on over there? And then they start piling in because they figured this is a great situation for me to make some money. So then now the media has to come up with a narrative of why this is going on. And so they started really focusing on a lot of these groups that we're going to talk about on Reddit that talk about stocks that kind of somewhat semi-organized about what their plan of attack is going to be. But what I think is we're seeing a transition from the CNBC crowd, the Fox Business crowd, into more of I wouldn't say a mainstream, but more of a homegrown analysis of the market. And people, because we now can leverage technology, we have access to a lot more information than we used to. We now can, in our little groups, kind of determine how we're going to conduct ourselves in the market without it being illegal, but it still being somewhat semi-organized.
Right. So in several of my classes, I talk about forums and the powers of forums. I think, say what we will. I know you guys get sensitive when I talk about Trump on this channel. That was a grass this movement, right? You had the Ron Paul, you had the the tax. Well, even though the guy what's the guy, Herman Cain, 999 tax, there was this real attention to like, wait, why are we paying all these taxes? What's going on, right? And so you have these diehard people, Peter Schiff, all these people that have been grass movements, Bernie Sanders filling 30,000, 40,000 people in stadiums. And I can say what I want about those people. Because there's a real truth to the internet being this reality for a lot of people. And what's the thing from the Star Wars? How does the Empire win? They make you think you're alone. Well, the internet's letting all these people know you're not alone. Come join us, the army, right? And it's funny because the media is trying to downplay this as some type of rogue, kids at home, got a stimulus check. You can't say that when it's 3 million people picking up shares of a stock.
Exactly.
When it's 1,000 people, okay. 2,000 people, okay. 500 people, okay. 3 million people, unique individuals, are purchasing something. That's more than what's in the current army right now. I want you guys to understand, when we see army, we think, man, America's army is so huge. No, it's less than 0.5% of the American population. So you have 330 million Americans. You have less than 2 million people at any given time in active Army, Air Force, Navy, Marines at any given time in our country. So you had more people, essentially, if you go look at the Wallstreet Bets forums, they have 6 million people signed up there. Before this week and before all this happened, when I was in it, when I originally got in it maybe 2 months ago, it had 1.5 million people in it. So to tell people this is not a big thing, that's a misleading conversation, period. And I'm laughing. I don't know if you saw it, but on CNBC, the guy, if I could find the clip, I'd show it. He was like trembling. He was like, "Oh, we just want everybody to know Melvin Capital has liquidated their position. They are no longer." We talked to the CEO and all this other stuff, and I said, "Well, have they publicly released that they're out? Have they said they've sold all their shares?" No, they didn't. They sent out a feeler to this news anchor to say this, and it's cracking me up because that just shows you how the power of this. But so for people who maybe don't understand GameStop and why they're shorting it, you could talk about the business model. I'll let you go there.
Yeah, I mean, and for people that came up, and I might be a little bit older than some of the people in your audience. They might be a little bit older than me, but we came up in like the cartridge era. Mm-hmm. So what you had was with the Nintendos, with the Sega Genesis, and then even going to the PlayStations with the DVDs, it was all physical. And so GameStop really was based around selling two things. They sold consoles, and they also resold your physical games. So what you would do is you would go into GameStop, either try to trade your games in, or you would purchase their physical games. And so essentially there was a brick and mortar storefront. Mm-hmm. As technology started to move with the Xboxes and the new PlayStations, you now have the ability to digital download your game. So there's no longer a need for the physical game anymore. So GameStop is being phased out because now using the cloud and using things of that nature, you can just get access to these platforms, to these servers, and just download your game. Also download your updates, download your patches, download anything that you want to do for your in-game purchases. So you don't really need GameStop. Mm-hmm. So GameStop was seen as something that was going to phase out, but the only thing that was going to save them was the new PlayStation and the new Xbox being rolled out, right? So you're going to get kind of like a console upgrade. That was supposed to save them, but long-term, they were supposed to go out of business. What companies do and what these hedge funds do is that, and this is something I also teach, is that when you see weakness in a company, your job is to attack it. So GameStop was seen as a weak company. They may be seen as a company with a lot of debt. They may be seen as a company where their projections for the future, they're in a market that is contracting as opposed to expanding. They're not going to figure out a way to reposition their offers. They don't understand how to pivot. They have a bunch of old ideas. So they're a weak company. So then the money can be made by selling out of their stock and then trying to get their long-term people and eventually their institutional holders out of that company. And you can do that by short selling. So when you're a publicly owned company, if certain firms see weakness in your share price, they're going to attack it. And I don't think there's anything wrong with it. I think that is just part of the market. The market is full of bulls and bears. So that's what you have with GameStop, where their future projections are really not seen as positive or optimistic. So there was a very, very high short position on that stock. It was well over 100%. And I don't want to roll into to maybe another part of this particular broadcast, but people identified that short position And then they started creating a narrative of how they could play against that. So there was a group of people trying to play against GameStop, and then there was another group of people trying to play against the people that have played against GameStop. And that's kind of how we got to where we're at right now today.
So something I want people to, because people are like, "Oh, GameStop, I don't go over there," right? And so let's kind of give trying to give you some balance here. I worked at Best Buy in high school and in college, and there would be these like Black Fridays, right? Or these like people would line up at the GameStop because it was smaller. They knew how many consoles they had. You could call ahead. We have 200. If the line's more than 200 people, you should get out of the line. And it was very simple, right? It's a smaller. You weren't standing in this long Best Buy line trying to get an unknown number because Best Buy was not allowing you to talk about how many consoles we had whatsoever. You had this smaller, it was kind of like a community. I'm trying to think of the best way to say it, right? So you had also at this GameStop, especially where I was at in Fort Bragg, Fort Bragg, they would have Star Wars days. They would have, different like Hedgehog so guys are out here, grown men, military men sometimes dressed in Star Wars, and they would have, the store's not even big enough for that. I don't know if many of you have seen a GameStop. They're usually not very big stores. And so these people are in the parking lot of this GameStop dressed up like Star Wars characters talking with each other. And so GameStop still has a lot of pull. You're talking about in rural areas. You're talking about in the South. You're talking about in Florida. It's a thing for young kids and young boys to go over there and physically get their game and look at all the other stuff in the store. And so even if when Charles Payne, who I'm actually quite proud of this week, I guess he pulled his Black Angry Man card. He was talking about how are y'all trying to kill a company that still has millions of people going inside of it? Like this isn't a Radio Shack. This is GameStop, right? And so I am one of the believers in, the company's not dead yet, right? It's not dead yet. But it does have a little bit of a shelf life. I'll say that it's coming. But way we have internet, I'm just thinking of sometimes maybe Hispanic families, maybe some neighborhoods who don't have the best internet. That's still an opportunity for them to walk into the store. Mm-hmm. So, Mike, it's GameStop. I just keep saying GameStop. I apologize. But GameStop's not the only one that they're shorting. Now, we have to understand what is the climate we're living in, you guys. We just saw 18,000 businesses leave California over the past 2 years. We've seen, thousands of retailers close and scheduled to close, right? And again, disclaimer, any advice we give here, it's our advice out of our own experience and that good stuff. But some of the other ones I want to address this is not the only other one, right? This isn't the only one. Like the last 2 years, GameStop's financials have been ugly, but Toys R Us was making $400 million a year, but their loan was just they had just enough breathing room of $5 million above their loan. And that's what happens to a lot of these companies. They're making money. They're cash flowing, but loans and debt and executive bonuses do hurt them. Okay. Another company I'm going to bring up, I'm going to share the screen. I'm going to share my screen real quick so you guys can see what we're talking about a little bit. So get an ideal that, what, Erica, what does that mean? Okay. So anyway, all right. So here's, and there's a couple companies I'm going to pull up just like this. So you guys want to, okay. And Toys R Us, really, if they would have Toys R Us didn't have enough money, which we can go over that in a second. They didn't have enough money to pay staff and do an update to their website so you could just buy things online. They had just enough money to pay staff and a little bit of upgrades. And that's where the struggle was. That's where the Bain Capital and those people kill. So yeah, some of the ones I'm going to talk about today is BlackBerry, Nokia, Cost, Express, and AMC. So just brace yourself, but I'm just giving Diamond Dave some upset. So this is GameStop. If you go GameStop stock, if you go Google it, and again, I just want you guys to do this on your own. Don't because Erica told you to. I want you to really check it out. This is where the company's been all 2020. $6, $5, $4. Again, at some point it was like $2.57 or something. And so you see here a lot of this as we go in this year, and this is the past 6 months, of course. Headquarters is in Grapevine, Texas. Now, this is at the point where it was 193. This is where the Robinhood did some sneaky to allow people to cover, and that's why they're getting sued. But you got to prove it. You got to prove people had money to buy. You got to prove a lot. Meet Kevin did a great video on it, but trust me, there's a lot more they're going to have to prove, and the stock market's not that stupid. But yeah, you can look at it for the past year. You can look at it for the past 5 years. Does that make sense? You can look at it for the max time. Is everybody seeing that? Do I need to make that graph any bigger?
Okay. I mean, if you just look at their 2 to 5 years,
mm-hmm.
I mean, you just kind of see how the stock was performing.
5 years, right here. Yeah. It was at like $26 February 2016. And as you see, it just drove it down, down, down. Now, again, the financials in 2018, 2019 were poo-poo. We don't know the financial yet for 2020. I'm not certain. I don't want to misspeak. So I don't know if they released and you can see the financials, but we don't know how bad it was. We're going to learn. But I have a feeling between men folk, I'm just going to say that, and young kids being out of school and men folk being able to work from home, the increase in games did occur. It may have occurred all through downloads, but I do feel like GameStop probably got some more money out of some moms and some dads because the kids were home longer. So it's just my thoughts. Again, that's my commentary. You don't gotta like it. But to try to drive a company to close so you can profit on it, that's scavenger business style. Does that make sense what I'm saying to you guys? Just drop a 1 in the comments if you understand what we're talking about. Whoa, look at that. Thank you so amazing for the $50 super chat. A little something for my AMC win. Congrats. Hold on. Don't let it go. Hold on. Oh, you guys got some good stuff in here, but I gotta stay focused. You know, I'm a little ADD. So, okay. Next company I'm gonna talk about, Diamond Dave, is called Express. Do you have any Express where you are?
I don't think so. There's any in this city.
Okay, so Express is a clothing store, and from my college days, baby, okay. you took you $100, went to Express, and you was straight, right?
It was like Forever 21.
Yes, but it was better. It was like the clothes were a little bit better. Like in my sorority days, you went in there, you and your girls, and y'all got y'all some dresses and you got some shirts, and you had the shiny shirts. You know, men would go in there and get the shiny button ups, right? This is when, frat boys went and got a black button up $20 shirt and a pair of slacks, and they was in the club that night, Mm-hmm. And so Express is another one of the companies, again, who is taking a hit, right? Because why? Diamond Dave, talk about clothing stores.
I mean, what we're seeing, and this is something that I talked about even before COVID hit, is I had told some people in one of my groups is that there's a retail ETF, mm-hmm. and I told them just short the whole ETF. Because the way Amazon is moving and the way they were all pretty much brick and mortar based stores. Mm-hmm. So I said, just short the whole ETF because everything's moving online. So if you don't have the ability to build out some type of online capability and to facilitate online transactions, in my opinion, you're not going to be in business in the next 5 years. Yeah. So what we're seeing with a lot of the companies that don't have that ability to build out that type of framework and to build out that type of infrastructure is they're trying to figure out where can they locate themselves at. What you talked about earlier, where people were still willing to leave their house to go buy something, mm-hmm. as opposed to order online. Because of my height, it has always been very difficult for me to find pants, especially khakis, mm-hmm. with my inseam in a brick and mortar store. Mm-hmm. So when the online came about, it became very easy because I could just order it online and go pick it up. Mm-hmm. So now I buy very few clothes in the brick and mortar store. I just order everything online and just go pick it up because it's easier for me because I know I can just order my size. I can essentially just select my size and go get it. So if the only way I can do business with you is through brick and mortar, you're costing me a lot of time and you're costing me a lot of inconvenience. And that's pretty much what a lot of the market is going. So what you're seeing is with a lot of the stores that don't have that capability, they never really invested in that kind of infrastructure. They're kind of in a vulnerable position and we're seeing it affect their stock price. So with companies like this, that may be something that they're being challenged with. And what you will look for is people that want to buy into this when you're listening to earnings calls, do the founders have a way of expressing, or not the founders, but the CEOs, how they're going to deal with this new economy where people are trying to just essentially use their mobile phone to do all their shopping?
Mm-hmm.
And how do they deal with that from a growth standpoint? Are they going to just go after a really small segment of the market that still wants to leave and go buy their clothes physically and then drive them back home?
Mm-hmm. Part of too, if you notice some of these companies, when you try to buy something online that's offered from them, you still sometimes have to turn it back into the store. That's the crazy part. Like, I'm like, I gotta take it to the express store. I bought it online. Part of why I think that's important for you guys for us to kind of dissect is Express had 635 stores in 2017. Now it's got 605. So that already told you it's dropped, right? There's 334 people here. Make sure you guys are hitting the like button. Help me fight Skynet here. Drop some ones, drop some comments, help build it out. So that at least more than 10% of y'all see the channel. Right. And so the thing about Express and the quality of clothes have changed, right? So this is the same argument from Forever 21. The Asian owners, again, started in 1980. Express was founded in 1980. They were founded maybe 1984. 81 or 84. And so a lot of these companies came out and got their stride and their biggest bang for their buck, honestly, in 1999 to 2002. Exactly. If you go back and look at the stock, you go back and look at the companies, 1999 to 2005, the game, right? Even a Bed Bath & Beyond, which I'll go over in a little bit, they were kicking butt when the first housing boom started in the 2000s. Okay. And so, Diamond Dave, I talk about a shift happened here in America, like 2001, 2008, and then now 2020, where 2001, what happened?
What are you saying with 2001, where I'm not sure if I'm
2001, 9/11 happened, and also the airline and the .com bubble.
Okay, so that's the shift you're talking about.
Yeah, that's a shift. And then 2008 was the housing market shift.
The housing crisis. Yeah,
right?
Definitely.
And then 2020 is the virus, however you want to say that.
Okay.
Right. So these three shifts happen. And if you look at our economy, people either went back to their old skill or had to get a new skill. And we still have people who haven't recovered from 2001. I've talked to friends and family who our dad, mom, they lost their house and just never recovered. Right. Yeah. Even in 2008, I have friends who dad had a construction business, lost out a bunch of money. He just never went back to normal. And so 2020 is also that big shift for people. And if you've got people at home, which one business owner was making fun of people talking about they're at home on their couches receiving checks. He was very blowed about it on CNBC. He was like, yeah, they're at home receiving checks. So they're messing with the market. No, you've asked Americans to be invested in the economy and to better themselves financially. You're insulting them. Right. So that's why I want to share these. And again, I always give this so you guys can look at the screen and you can educate yourself. Don't take my word. Don't take anybody's word on it. Look at it for yourself and give us some of your, what are some of your thoughts on 2020 as far as people learning stocks, because that seems to be quite popular on our YouTubes.
Yeah, I mean, I think, and this is something I noticed when I first got online and I was trading. One of my biggest challenges was that I had to pay to trade. It was you had to pay commissions. Mm-hmm. So I was paying $7 per trade on both sides. So essentially, I had to factor in $14 into what I wanted my overall profit to be. Once they rolled out, and this really happened with Robinhood and everybody else had to follow, no commission trading, where essentially you can trade for free. That was already exploded before COVID even came out. So Robinhood was already building up a lot of traction, and then what it did was it made all the other brokerages, right, or really trading platforms have to follow their lead. So then everybody else started rolling out no commission trading, because when I first came on to TD Ameritrade, I was paying $7, and I moved to Alley, I was paying $5 per trade on both sides. So Robinhood essentially had a no commission, but I didn't like Robinhood because at that time they were only mobile based. And I liked a lot of times trade from home, and I didn't really see where they had a laptop or desktop platform. Then once COVID hit, a lot of people, one, because they were home, and then also two, because they were looking for something to get into, they started to realize how easy it was to trade using these apps like Robinhood and also like Webull, which are primarily mobile based. And something about Robinhood is they make it very easy to trade, and they add in a lot of gamification. And because of that, they were able to attract a brand new audience that a lot of the older schools of Fidelities, the TD Ameritrades, the E-Trades really didn't understand how to attract. They didn't really understand how to market to them, how to speak to them, and to create a user interface that was attracted to that particular group of people. So we're seeing now a whole new group of people in the markets because of Robinhood. You got to give them the credit because they brought a lot of people in. There are people in the markets now that would have never been in the markets without the Robinhood platform, right?
Never,
and then now you brought them in, and then now you have a totally different perspective of the world now, because you realize that there's this area of the world in which people are making money and involved in commerce that you never knew about, and there's so much money in it, and it's almost fun to be involved in it. It's not like, we were taught the finance and the Wall Street is very boring, it's very dry, it's very stiff. Robinhood figured out how to make it fun for people. And that's one of the reasons why they just brought a lot of people over to the space.
For sure. So part of something I told people to pay attention to is, I don't know if you remember this kid, but Tai Lopez had an Asian kid come onto his platform and talk about credit and getting credit cards, and he made his Instagram credit, and he's out there. He's like a 5'3" Asian kid, with white girls laid all over his cars and stuff. And what people really didn't pay attention to is this kid was talking about mergers and acquisitions. And people kind of just threw that part off to the wayside because they really weren't trying to, people just want to get the credit card so they can go to Miami, and that's what they wanted, right? And listen, no shade, but you have to understand there's a bigger game being played. If you don't understand, you are the product, right? Like, we can go ahead, like Facebook, you ain't using Facebook using you, okay? Like when I started with E-Trade, I had to pay $9.99 to trade a stock on both coming in, going. And so, but Tai Lopez got something out of that relationship with that young Asian kid, which I did a whole story on that, where he started doing acquisitions. So what did Tai Lopez buy? Dress Barn, which was like last leg dead, right? He also bought Linens and Things, which loses out to who? Bed Bath & Beyond. That's their competition. Let's see if I can share the screen again. The reason I bring these up is there's a wealth transfer game being played in front of our face, and I just don't think everybody has noticed. We made fun of Tai Lopez because he took $500,000 and dropped it on YouTube, and Dr. Boyce Watkins dropped $500,000 and dropped it on Facebook. Well, who won that battle? Okay, I'm gonna say it that way, right? And so I'm gonna just go there. That's how I'm gonna leave it there. But so this is Cost. This is Cost Corporation, and then I'll hit Linens and Things and an article you guys should probably read. It was founded in 1953. Right now, it invented high fidelity stereophones, whatever. I'm trying to say headphones and audio accessories. Now, if you think about, what do you think about when I talk about headphones in the chat? What do y'all think about when I talk about headphones? What's something you think about? And it's a 30-second delay, but I don't think about cost.
Exactly.
Who do you think of? What comes to your mind, Diamond Dave?
I think about the iPods with the Apple phones. That's what I think about. And then before that, I would think about Beats by Dre.
Boom. Beats by Dre. Yeah, they're dropping it. Bose and Beats by Dre. You think so? Cost doesn't come to your mind, right? And so even if you look at their numbers here, this is the past 6 months.
Okay.
They've been sitting at $2 for a year. Let's go back even 5 years. 5 years, they were sitting at $2 forever. Forever, right? Like forever. And so I'm not saying that hedge funds were necessarily trying to run them into the ground, but the opportunity was there, right? They've driven companies to a zero stock. Yeah. And so there are people who bet not their whole hedge fund, but a huge portion of their hedge fund against these companies making it, especially after 2021. So now you see it went from this $2 to $64, right? You just go 6 months. Okay. Now let's go the past month. Let's go to past 5 days.
Yeah.
Right. And so you have to pay attention to why are these things happening? What's the thought process behind it? Like, is the company sound? Are they falling apart? No, but I don't think of them when it comes to headphones, anything, right? Even Bed Bath & Beyond got a bump, because Bed Bath & Beyond is gonna be fine. Like Bed Bath & Beyond, people always need stuff because people are buying houses, shoring up their houses. It's linens and things that Ty Lopez bought that couldn't make it. And again, you can see where he picked up Dress Barn. Do you know what Dress Barn is? Have you ever seen one?
I've never seen a Dress Barn.
It's like their target market is black Southern women, Southern dresses, 40 to 60 years old, or white women. One half of the store looks like older black ladies, the other half store looks like older white ladies. Okay. You know, 45 to 65 buying dresses for church, straight up. And teacher clothes. I call it teacher clothes. Okay. Whenever certain stores fit a certain, I call them teacher clothes. So if you see right here, he launched this in the App Store, and he hasn't even turned on marketing yet. But the fact is, because look at the competition here. Yeah. Sally Beauty, Champs. I haven't seen a Champs in a long time. Yeah,
I haven't seen one either.
Right. Nordstrom is struggling a little bit, but again, Ty Lopez slid through the door and is buying something, and you know, he may be on your next Swaggy McSwag list because he's raising money now for, hey, I bought this, I need help or whatever. So, and so this is How to Fire a Business Up When It's Going Bankrupt by Ty Lopez. This is techtimes.com article. Now, this is 28th of December, 2020. I want y'all to go and read some of these. What you have to understand about people's businesses and people's memories are short on the internet. Would you say that?
Yeah, definitely. I mean, it might not even be a week.
Yeah. And so some of the plays we're seeing here, these are 2-3 year plays. This is where they're going to run ads to companies that have never had ads before. They're going to invest in parts of the business that you just don't even think of, right? Because most companies, as they're going down, they contract and they quit running advertising, and that's what even kills them more.
Yeah, definitely.
But if you see this, and the reason I say 2 years is a lot of people have very short mindsets, very short tempers, very short. If it ain't in 30 days, oh my God, Erica, I'm not a millionaire yet. They're not paying attention. And if you pay attention to a lot of these people are going to go for 2+ years. So part here is just this part of this article. If you read this, the likes of US, Century 21, Bloomingdale's, Hallmark, Nordstrom, CVS, Kmart, Bose, Sears, Sur La Table, Olympia Sports, Offers Depot, Macy's, Forever 21, Family Video, JCPenney, Victoria's Secret, Bed Bath & Beyond, GameStop, New York & Company, Stage Stores, Pier 1 Imports, and Model Sports. If you just read those companies right there, just those block of companies, I can pretty much tell you only 2 are not half dead. Yeah. And that's literally Macy's, which is technically half dead. But Macy's and I would say Hallmark, and that's only because Hallmark is branched out into other sectors.
Okay.
But I'm gonna copy this, and y'all, read it on your own free time. But
yeah, I didn't know Kmart was still around.
Yeah, they got bought out. They got bought by somebody, and there's still like 4 stores.
Okay.
One's like in Oklahoma, and they keep tracking the store because they're like, people in the town are like, whatever, I'm gonna still keep going.
Man, it used to be everywhere.
Well, I know a lady who retired with a pension from Kmart. Okay. And she said she felt like in 2001 it was starting to go bad. So she said, they're like, you want to retire with your pension now? She's like, yes.
Yeah.
Take my money now while you can still take it.
Yeah, they were one of the Walmart casualties.
Yes. But here's the thing. Remember, if you read the story of Walmart, the guy actually wanted to go under, not a Modell's, but somebody, it was like a all-in-one store company. And they said no or franchising him. And then the next year he was like, okay, we'll bump it. If you ain't going to let me go, I'll make my own franchise. And that's why I tell people, I mean, What's Up app was a turn down from Facebook. Facebook was like, no, we don't need that. And then What's Up app came out and was like, multi-million-dollar company, right? Yeah. Sorry, hold on here. What are some things, and I know you teach fundamentals, but when you have a market that's kind of not even based, some of these companies have doo-doo companies. They're terrible. What should people be looking for? How should they be preparing themselves?
So first thing I would say is that if you're looking to buy into this stock, you really want to understand what's your exit plan? So what are you looking to get out of it and where are you going to exit? And then you should always ask yourself, where are you willing to exit top side and where are you willing to exit downside? So if I go into cost, and I think cost is around $66, so let's say I buy that on Monday. What am I looking to get out of that top side? What am I looking to lose? And then how long am I willing to stay into the play? And then you also want to ask yourself, if you're willing to sit into it, and this is something I always tell people, is that they have to report earnings every 90 days. Get on the earnings call, and it's going to be recorded. What is the CEO saying that their projections for the future are? So what are they saying that their plans are in which they're going to try to take this new capital infusion, and what are they going to use that to do? And so you really want to understand what is the forward vision of the people that are controlling that company, and how are they going to grow that particular share price? Because the goal of the CEO is to get a return for the shareholders. So if we're rewarding that CEO by buying shares, then they need to be able to communicate back to us how they're going to grow our investment. And if they can't communicate that to us, then that means that we need to pull our investment out and go into another direction.
Right.
So when we reward these companies that have been struggling with new capital, they have to communicate us what they're going to do with that new capital to make sure that we continue to get a return on the investment, so we don't lose it as opposed to get a return. And so that's what I would tell everybody. Just know what your exits are going to be, so you don't get left holding the bag because everybody else knew when they were going to exit and you didn't know. So you just got stuck sitting in one position.
Right. Even now, like, I want people to understand IBM and Dell, because I'm here in Austin and there's a huge IBM campus. I'm here in Austin, and people may, oh, Erica, whatever, it's not tech, you're not in California. I'm here in Austin, and I can tell you with my eyes, Dell and IBM may both be just struggling the exact same. But the difference is Dell took themselves back private, and IBM is still out here being butchered by its shareholders. Now, the difference is, I'll use even myself as an example. I can do things with my own money and be patient that you cannot do with investors' money. Exactly. Every 30 days, your investors expect a call. Erica, what's going on? And you give them, hey, this is what's going on, but we're still working the process. You know, hey, this is what's going on. And you have to understand that people, again, short time frame, short mindset, like, well, this ain't working in 60 days. I want some money, right? And that's not how businesses grow, right? Everything, if you're in any of my courses, I talk about seasonal, January to March, April to like June, okay? July to like August, to September to November, or September to December. What people are doing, what people are buying, kids are home from school, you know, kids go back to school, Christmas, all these things play into our economy and our markets. Let me see here.
Yeah, and definitely. So, and a lot of times people, if you have a shorter time frame to invest, then you definitely want to know what your exits are going to be. Because, you know, I know you haven't gotten to AMC yet, but AMC was a company that wasn't doing great before COVID. Now they've gotten a lot of capital infusion. They've turned that into equity. But the question is how long can they maintain during this new environment that we're in? And what are going to be their plans for the future? So it may just be a 30-day hold, or it may be a hold to where you're in it for the long term.
And the thing about Robinhood that I love that people are pointing out, they started there. Is it working?
Your audio cut out.
Oh, is it back? Oh, is it back?
Okay, let me come in and come back up.
Okay. Okay, can you hear me now?
Yes, ma'am. I can hear you now. Sorry about that.
No worries. Okay. I was like, everybody drop a one in the comments if you can hear me right now. Okay, so the prime example, this guy said, Robinhood was my intro to stock 7 years ago. I moved to Fidelity after that. Anybody who is seriously about educating themselves and studying the stocks, you go on Robinhood platform, I would call it very basic. What would you describe it as?
I mean, it's very basic, but just what he spoke to was that Robinhood has done a great job of bringing people in. And so that's pretty much what they're going to do, is that they simplified everything. I wouldn't say it dumbed it down, but they simplified it. They made it easy to access. They made it easy to get into the markets. And Fidelity really hasn't reached out to what I would call new people.
Yeah.
But Robinhood very much made a rush to let's try to bring in a new audience. And you got to understand is that if I can get you to start investing at an early age and you stick with it, what a market now has somebody that is going to bring in new liquidity for the rest of their life. So what Robinhood is doing in the function that they're playing, which is very important, is they're bringing in a young group liquidity, and then if they remain in the market, then that liquidity stays in the market for the rest of that person's life. And the market only exists if we can get new liquidity and we can continue to expand. So Robinhood to me is playing the same function that Tiger Woods played in golf in the early late 90s, early 2000s. Tiger Woods brought a lot of young people into golf. It's the same thing. And that's one of the reasons why when they IPO, they're going to be worth so much. Because they can go after that young demographic that Fidelity and TD Ameritrade wasn't even interested in going after. And they were able to bring them in and also bring in that new liquidity. And one thing the market needs is liquidity. You know, we need new money always coming in, whether the people are winning or losing. We just need more and more new money because that's how we expand the market.
Part of it too is if you notice a lot of these Robinhood, there was a day, I think it was a 3-day window where it was like 5 times it ran out of liquidity or something. It was like you couldn't buy, you couldn't do. You guys, that's the sign to jump ship. Like even, you know, Kamasa making fun of saying these guys were jerks when they came to ask me for money to raise money. I've raised money with people, and usually the people you meet that raise money are usually a little bit of a jerk, right? They're not always like likable. I work better on this side of the sector, the private sector, because I'm likable, right? I've gone to companies and they've been like, okay, Erica, what's the numbers? I've gone to more, sometimes what we call uneducated investors sometimes, or under credit, and said, hey, this is what we're trying to do. This is what we're trying to move. And so Robinhood, you have to still think not that they're a startup technically anymore, but they kind of are. They came in the market with such force that they've made everybody else have to drop the prices, right? Exactly. E-Trade was $9.99. Fidelity, all these people were charging people, TD Ameritrade, and it was cool. It was, you knew you were getting charged. Now nobody's getting charged. So Robinhood has done powerfulness, but what people also have to realize is Elon Musk is in this because they've been shorting Tesla for years. Like people don't understand. Like, I mean, he's South African. The petty is there. He's like, I'll fight you. You know what I mean? And so Elon Musk is such and he'll have to be careful at some point too, but he's such a powerhouse that he can say something. And these people who have no knowledge of GameStop as a stock, people have no knowledge of like, well, what's that? Let me go Google, right? And so, you know, if you're a capital company and you've been shorting Tesla, honey, he might have a list somewhere. Somebody might have gave him a list and he's just trying to come get you now. So I wouldn't put it past him.
Yeah. I mean, but yeah, Tesla was heavily shorted for a very long time, but I can understand why he has an issue. But I mean, there was a reason why people were shorting Tesla.
It's kind of the magic nothing. Yeah. But I'll let you explain that. I'm gonna not say. Go ahead, you explain Tesla.
Okay, yeah. So I mean, with Tesla, I mean, you're looking at a company that got almost $1 trillion cap. And I think they might have sold 500,000 cars in 2020. So it's kind of really hard to justify that valuation with their sales and also their revenue. And one of the reasons why Elon Musk didn't like people shorting Tesla because it kept the stock price suppressed. Once they were not able to short it anymore, they were able to blow past that. Well, what has he done? He's taken that capital and he's invested it into manufacturing, which has raised the stock price. So he's taken more of that capital and invested in manufacturing, which has raised the stock price. But we have to see long term, does that result in revenue and also manufacturing capacity, the ability to manufacture more? The reason why he was so against the shorts is because they were suppressing the stock price, so we couldn't raise more capital. So that's why he had a problem with them. But you know, the problem with Tesla was that they were a good short because nobody really expected them to last a decade
at all.
You know, so yeah. So he was fortunate to last, but they were a stock with a very passionate fan base. And a lot of people are really investing in Elon Musk, not necessarily investing in Tesla as the business. You know, because the guy has a massive amount of influence. And then once they got added into the S&P, then all the big firms had to jump on board because now you got to add them into your index because you got to be weighted or indexed towards the S&P. But we got to think long term. Can they justify their valuation? Because with Biden, with this whole EV push, I think they're going to be good for at least the next 4 years.
Oh, for sure. And Nancy Pelosi, see, this is the
Give me 1 second.
Yeah, go ahead. So Nancy Pelosi, even her just nicely buying Tesla stock magically 24 hours before they're gonna get this contract. What's up, Dave? We always know when you're gonna drop because we hear da 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 from your audio side, and I'm like, oh, he about to drop again. So Nancy Pelosi buying this stock is like in any other. If this was the culture wars of the early 2000s, the neocons, she would have been rolled out on a stick. But we are now so jaded and expect them to be doing shady things. I mean, Martha Stewart went to jail for less, y'all. Like, not even enough money. If Martha went to Stewart for millions, I'd be like, okay, but it won't even it wasn't millions. And so that's what drives me crazy about this. And so I am glad the little guy is sticking them, but I still stand by what I say. Some of these hedge funds have teachers' pensions, police pensions, and firefighter pensions. So not all of them, but And what's your thoughts on Google taking down 100,000 negative comments of Robinhood at that?
I mean, it's just how the game is played. I mean, what people have to understand is something I really try to impress on people is that we're in a world where groups are organized amongst themselves to be successful. It's really not about individuals. And so if Google decides that Robinhood and their success is good for their business, then they're going to look to protect that particular organization, that particular group. And the same thing with Robinhood and their association with people like Citadel Capital, and then Citadel Capital with their associated with Melvin Capital. These are all different groups. They're all different entities. And so what they're doing is they're looking to protect each other because it's good for their business. And individuals are just going to have to deal with the repercussion of the fallout of those relationships. And so Google's just doing what they think is good for their business at that particular moment, is that let's protect Robinhood because we don't necessarily know what relationship they may want to have with Robinhood down the line.
Yes.
And so they're trying to do what they think is good for their business at this particular time, and then what also could be good for their business in the future, because Robinhood is just a powerhouse application. They got so many people on it. They have so much liquidity and capital rolling through it. And then you never know down the line what Google may want to do with Robinhood from an advertising standpoint. They may want to start doing, Google Display Network into Robinhood. So they're just going to look to protect them now to make sure that they are viable right now, so they can make sure that they're going to be viable in the future.
Oof, listen, y'all, if y'all didn't hear what he just said, I want y'all to pay attention, because review that later, because here's the thing. The same things, I'm gonna hold back. There's something else I want to say, and I'll wrap it up. I'll wrap it up in a little bit later. Kamatha is a direct competitor. Robinhood releasing IPOE as a trading platform. Yes. Yeah. And part of two, I'm trying to get y'all to understand this shift is in. Like, if you have a young man, young Black person, whatever, in front of you, that's, I would say, 16 to 24, and you're not teaching them about business or stocks or any of this stuff, I'm like, they're missing out on this world. Like, and I always talk about it from a little bit of a privilege. Like, our family was struggle in the 1980s. The farmers, we all piled up. Everybody jumped in the military and then started buying real estate. And what people don't understand is like, oh, how'd your family buy real estate? Oh, you must be rich. No, like, real estate in the 80s was like $35,000 for a house. Like, it was, you move some money around, or you talk to a neighbor, or we did seller financing, right? Now, as I was going into college, the people I was around, I went to AP classes the whole time through high school. Then when I got to college, the people at ECU at the time were second and third generation ECU students who came down from New York and New Jersey. And it was cheaper for their parents to send them to ECU, this school in the middle of nowhere in North Carolina, than send them to school in New York or New Jersey. And those kids, when it was time to leave, went right back up to Wall Street and went right back up to New Jersey and went right back up to the pipeline. And I got a chance to be immersed around the sorority I was in. It's a white girl sorority. Y'all know that. And the classes, the business major people I'm in there, we had a teacher literally just decide, oh, I'm not even going to teach on what you signed up for class. I'm going to teach y'all about stocks. And that's how I learned about the stock market. Like, me and 4 or 5 other kids in there who, demographic wise, the looks wise, parents wise, would have never learned.
Yeah.
And I did mess it up. I put $2,000 for my student refund check and made eight grand, took some off, and then lost the rest of it. It was penny stocks. It was silly. Don't do that. But but the exposure. Like, I really want y'all to understand that, like, if you don't have your kids at a certain level of being exposed, like, you're closing off worlds to them, right? Yeah. They're working jobs they don't want to be at because mom and dad and people didn't expose them. My nephew's part owner in a trucking company, right? And in the physical truck, there's a 24-year-old kid. I'm trying to get him on the channel. He owns 20 box trucks. He went to school a year and a half, did the math in his head, and realized, well, I've got like 9 family members that all drive. I could go buy these box trucks with my good credit and I'd probably use some of that student loan, but we ain't gonna say that on camera. And got those trucks rolling. So now he's got 20 trucks and 9 family members who are consistently working. This generation we're talking about now, these millennials, they're picking it up. They're finally like, oh, okay, like I can get into this. This is a real opportunity. This isn't just the MLM. This is, and not no knock the MLMs. I ain't trying to get that fight. But Diamond Dave's teaching you actual options, how to option trade and how to actually get into the stock market and understand the fundamentals. And that's why I like bringing people on that are going to have these conversations. So, where's the other thing? You guys be having good comment. Robinhood selling all your data. So is Facebook. It's how they make their money. How do you expect them to make their money? Let me see. Why AMC and not GMC? Well, AMC to me is, here's the thing. When I looked in the news and they were saying Q3 and Q4 of 2021 was going to bounce back up.
Yeah. And
then I looked at what the blockbuster movies had moved their time to. All the movies are in July, August, September, and next year. They moved them all the way to 2022, same time in the summer. Why? In the summer, we going out the house. Exactly. I don't care if there's a pandemic or not. We're going out.
Yeah. And that's something that if you go to smaller cities, and something I noticed, I'm from Florida. I used to go to a city called Lakeland because I knew a chick that lived out there. And one thing I noticed is that on Friday, everybody would leave the house and go to movies, go to restaurants, things of that nature, just to get out and to do something and to be active. So I definitely think is that once these theaters get back open, they start putting these blockbuster movies back in because there's going to be a lot of pent up demand for them. Everything's going to get back rolling again. So the demand is definitely there. It's just we have to get back to what they want. And people will always, and I learned a lot of this by watching a lot of like these dystopian type movies. People always look for a sense of normalcy to come back. Yeah. So whatever people were doing before COVID, they desire to get back to that. So the fact that we could go out and go to a movie and go to a restaurant on Friday or Saturday night and enjoy life, everybody wants to get back to that as fast as possible. So once we have the opportunity, you're going to see a big rush towards back to that type of behavior. Most people don't like sitting in the house all day.
No.
Yeah.
Not naturally. Not naturally.
Yeah, exactly.
And even older people, even when you look at older people be like, oh, can you take me over here? Can I go to bingo? Like you'll see a bingo hall full of 80-year-olds and you're like, y'all paying this, but it's to get out of the house. It's to be social. We're social people. You saw what happened in Las Vegas, right?
Now what happened?
They having so many suicides of young kids. They're opening the schools back up.
Okay. Yeah. I mean, it's rough. I think people like being online, but once they were forced to have to only be online, they didn't like that.
Yeah. And mentally it's not good for you. It's just not good for you. Yeah. Like my 5-year-old nephew is on kindergarten, and every kid in every square is playing toys. And I started laughing because I'm watching and my mom's like, okay, pay attention. And he's playing with little G.I. Joes. And the teacher is just leaning into it. And she's like, hey, everybody, show me your toy. Describe it in a sentence. And so even the teacher is having to figure out, okay, well, how do I even get 5-year-olds who are not physically in front of me to pay attention?
Exactly.
Hold on, let me see. Somebody had a great comment in here. And what's the other stock I was going to talk about? Nokia. What's your thoughts on Nokia?
Okay. And I was looking at Nokia earlier this year. My question is, how do they compete in this new environment? So they would, because they were depressed for a reason. And it's the same thing as that. How do they compete in a new environment and what are their plans for it? Because I was definitely looking at that as a long-term play. right? Maybe a play going out 6 months to a year, but I really couldn't figure out how they're going to compete in this new environment, because what I look for in every stock to where they've been at a certain price point for a year or greater is that there's something in the market that is not allowing their stock price to move up. And then also management is not doing their job, because the job as management is to make the stock price go higher. So what I'm looking for is there going to be a change in management. And I think that's one of the reasons why people became so bullish on GameStop, is because one of the founders of Chewy became an investor, and then he got a position on the board. So I think that's what made people so bullish. So when I'm looking at a company like Nokia, my question is, what are the changes in management that are going to allow them to start to make the stock price go up? Because you can't have a stock price supported just by people buying. The CEO and the board have to try to figure out how to create more value in the marketplace. And that's something that Ty Lopez is trying to figure out how to do. How can I create more value in this marketplace to where it supports the stock price? Because the stock price cannot just be supported by trading behavior, because over time that emotion will get exhausted. And so how can, instead of how can we just get a gradual increase over time? And that's really what you want to look for on a chart. So if you look for, like, let's say a company like Visa, before COVID, if you look at their 2-year chart, it was very gradually up. These parabolic spikes are good if you are trying to day trade and get in and get out. But long term, how do you support that emotion? And so how does the when you're looking at Nokia, how does the management communicate to us that they have a long-term projection in the future for this company, where we can get a gradual return on our money to where I feel comfortable putting my money in there 2 to 5 years?
Now, and something I tell you about, like, same thing with BlackBerry and Nokia, and you can address BlackBerry too. Or go ahead and address BlackBerry. Thoughts on BlackBerry? Because I tell people, like, you kind of forget, you just think of the United States, and you forget in Africa, in India, in other countries, in South America, BlackBerry is still out there. Dubai.
Exactly. And BlackBerry, and I was telling somebody about, I was comparing BlackBerry to Tesla. People saying, well, Tesla has first move advantage. And I said, so did BlackBerry. And then BlackBerry came out with first move advantage. And then once the iPhone came out and then Samsung came on, it tells her that they kind of lost their position in the American market. And so with BlackBerry, the question, the same thing is that how do they reinvent themselves? How do they pivot as a company to where they're not seen as a company that was first with the smartphone and with the PDAs, but they now can reinvent themselves as some type of hardware manufacturer? They have a different perspective of what they're doing that also creates an opportunity for gradual growth. So I like their how people are now bullish on it, but how are they going to compete in the non-American market, and what are their plans long term? And so that's always the biggest question, is that how does management communicate to me that this is going to be a long-term hold based on what they want to do in the future? Or is this just going to be a short-term trade where I'm going to just take advantage of the momentum of the stock, get my return, and get out with the anticipation that this thing is going to fall just as fast as it went up? We got a saying as traders is that you take the stairs up and you take the elevator down. So when you're looking at particular stocks, is this just going to be a short-term trade for you? Or based on fundamentals, based on how management can communicate to you, you believe that this is going to be a good hold for 12 weeks or later? Really quickly, the guy that really started off this whole GameStop push, he believes this is a good hold past 2 years. So his position now was in the millions, and he's still holding.
Yeah.
Now, I don't know where he thinks his position is going to go after this point, but he just has a really, really strong conviction of this particular stock 2 years or longer.
And this is part of, like, you guys, there's 657 people here right now. Thank you. I appreciate you. Keep commenting, keep throwing ones in the chat if you like the conversation. You know my fight with Skynet. Try to get more than 10% people to see the channel. Help, come on. I don't always ask for cash. I don't always ask for super chats, but I do ask for them likes, and I ask for them ones. All right. If you like the content, drop a 1 in the comments right now. Help your girl out. All right. So listen, the crazy part of all this is there are people I know from college. They went and got a job, a government job in North Virginia, worked it for about a year, started putting money in stocks, and they haven't been back to work since.
Yeah.
They do just a little bit of trading. And I'm making it sound like, oh, but that's actually their job. Like, that's their job. Like, they took some money and bought one real estate property, and he's a cool guy, and he did the National Guard, so he did the weekend warrior here and there. But what people don't understand is this is a whole, like when I talk about real estate, construction, and healthcare is 45% of the GDP, but only 6% of the stock market. We're talking about two different economies. Like people literally don't understand that there are people over here who are on the internet making money. Like I literally have to go to my bank and describe what YouTube is and what consulting and courses, and like they'll be like, oh my gosh, that's amazing. And that's where we are. We're still in a society that thinks this is like a magic trick, but this is a long-term hold. This isn't like movie theaters aren't going nowhere. I mean, AMC just spent all this money 2 years before this happened, the virus happened, building brand new movie theaters and getting food and drinks, hot food and drinks, not just popcorn, like sandwiches and burgers and all this stuff, because they know if you pay attention to the real data, that's the best way I'm gonna say it. In 2008, movie theaters made bank.
Yeah.
Like the housing market crashed, but guess what? People are like, I'm gonna entertain myself.
Yeah,
This
exactly.
Friday, I'm going out the house. I'm from a military town, and Fayetteville has too many movie theaters. And every weekend, 30,000 soldiers are in the movie theaters, right? They stay going. And so anyway, that's Nokia baby. Someone said NASA contract for the moon Wi-Fi. Google it, dude. 5G for the future.
So he's bullish on that, and I like that. I like the fact that he believes that there's actual a fundamental aspect to why he should be bullish, especially with the 5G long term.
Mm-hmm. Yes, virtual kindergarten is ridiculous. So we basically take our nephew and put him in a trampoline class and a karate class because they need to be able to talk to other kids. That's just the normalness of it. Somebody said Vine Therapeutics got invested by BlackRock, $2.4 million in shares. Ooh, yeah, that's crazy. There's a couple other companies I had. What was the other one? I had one more company I was going to ask you about. Oh, Microsoft. Okay. Give us some thoughts. Give us some thoughts and some feedback.
Okay, so what I would tell everybody about Microsoft, and especially as a trader, look at their 5-year history. And outside of the small exception for COVID, it's going to be relatively positive. So a company like Microsoft, because I'm really not worried about any new news on Microsoft, like what people call catalysts. They're such a well-established company. To me, they're the kind of company that you invest in and retire off of. So you may get a spike in their share price from catalysts around their earnings. You may get a small sell-off around their earnings. But Microsoft is such a strong competitor in that particular space. I would just say buy that and sit on it. If you want to trade around your position as a trader, that's cool. But Microsoft will still be here when we're all gone. They're extremely well managed. They have a really big piece of the market. They're able to open up new partnerships and new opportunities. And so we're talking about the stocks that you can buy and retire off of. Microsoft would be one of them. And they may have a 5% sell-off. You may have a 10% increase. But if you look at their 5-year history, and if you also look at, see how it's just gradually going up, that's what you want to see in a company. So as a trader, especially as an options trader, if I buy a contract and put a 90 or 120-day expiration date on it, it's very likely that contract is going to be worth more in 90 or 120 days than when I first bought it. And I just keep doing that over and over and over again. What you also can do with Microsoft is look at their close every day over the 30-day period, and you can just average that month to month, and you can start to kind of understand where they close at every month and whether or not you project their seasonality for that month to be positive, and then play options off that. And it's because that their trading behavior is almost predictable because they're Microsoft. So with companies like this, you can be very, very optimistic about their future, because when you look at their chart, what you're looking at is a management team that understands how to return shareholder value. So this is not like a gamble. It's not like a shot in the dark. And you're not seeing a lot of parabolic spikes like a Tesla. You're seeing just a very gradual increase. So you're very confident that if I buy shares this today in 2021, in 5 years, they're going to be worth more than when I bought them in 2021.
For sure, especially with Microsoft. Like,
exactly.
Name every computer you've ever touched. They have some type of software contract with that HP, Apple, whoever. They've connected with each other's. Tyler Bennett cracked me up. He said, "How do you go to dog food from dog food to video games?" Chewy CEO can do it, I guess. You know, I mean, most stuff. What you guys understand when you get to a relationship point in your life, a lot of the moves you'll make, if you're smart, are lateral.
Yeah.
Would you agree?
Yeah, definitely. And
I hear a lot of it.
If he's been successful at business, and GameStop is a struggling business, even though it's considered like a different vertical, he may have some ideas of how we can move this into the future that may have not been thought about by the particular board at GameStop. And so I think sometimes that new perspective that is being brought in from a guy that's already been successful in another area, he could just bring in a new perspective and a new set of eyes in a situation that we know wasn't there because GameStop hadn't really figured out yet how to really transition into the new era, even though they got a really good partnership with Microsoft for data. Yeah.
I have another one. Are you good on time? Let me know if you got to
I'm good.
Okay, everybody, listen, there's 680 people here. Let's get this to 1,000. Listen, if y'all can give Kevin Samuels 14,000 people for the women's, you can get me to 1,000. I know y'all can do it today. I believe in you. One person said Nokia and BB, I think you mean BlackBerry, both tied themselves up in the money. Years from now, they should be good, or they're on pure BS. Let's see. They said Nokia will make a comeback with 5G. Thoughts?
I mean, they may. I mean, we have to see. So, I mean, I like the fact that he believes that there's something fundamental related, business related to where the future is going to be positive for them. And so if he's a long-term buy and hold guy on Nokia, this is a great time to get in if you are positive on their 5-year future. And just get it and just hold it for 5 years and see, because we know 5G is a reality.
Yep.
So if you believe that 5G is going to really put a lot of fuel up under them, this is a great time to be in. And he's like, Crackberry used to be everywhere. Yeah, everybody used to have BlackBerry used to be a status symbol at one time.
Oh, for sure. Like, I always remember this guy was 30 something years old and we were young girls and he was like on his BlackBerry and we're like, oh, he got some money. Boy, probably worked at Verizon. Anyway, let's see. You guys got some good stuff in here. GameStop signed a long-term, multi-year strategic partnership with Microsoft. Listen, y'all, I mean, it's just not going, companies don't die, right? I mean, it takes, and this is what I try to get people to understand. People don't just become homeless like that from one paycheck. This is this theory, like, you're one paycheck away, you could be homeless tomorrow. No. There are so many steps on the ladder that you either not saving, not investing, don't have enough, your job ain't paying enough, all these things. Like, you'll never lose it all and go to bottom unless you have bad foundation and bad fundamentals. Does that make sense?
Exactly.
And same thing with companies. You don't, Lehman and all these people in 2008, the Enrons and all these people in the company knew they were like, oh man, it's kind of bad, but I'm gonna stay, right? Like, I'm gonna get my check. And this is this one I want people to understand. Like, a lot of these companies, if I'm a company and I'm struggling, every day we have a team of people going out trying to go find us either new business, or we're trying to do some kind of partner where somebody buys us. All right. So Oracle is working on a partnership with Amazon. Oracle campus that's here already is huge in South Austin off Riverside. So when they said they're moving here, I'm like, well, what else y'all gonna build? You didn't took up a whole block. Where else can you build? Let me see. Somebody else had something good in here. Microsoft won a DOT, Department of Defense contract that was $10 billion.
Yeah, I remember that.
Woo!
Yeah.
That's y'all got some good stuff in here. Okay, what's the other one I have already pulled up? This one. Oh wait, I gotta share the screen.
Okay.
Give us your thoughts on Square stock.
Okay. Big fan of Square. I personally now kind of think they're a little over the top.
Yeah.
But I still think long term, based on where everything's going from a payment processing standpoint, I think they have a great future. And I believe that the CEO of Twitter is he also the CEO of Square, if I'm not mistaken.
I think so. Somebody check us in the comments.
Yeah, and I think that Square is going to probably get a lot more of his attention because I think that they're future is a lot brighter than the future for Twitter. I don't think Twitter's going anywhere, but I think Square can be a much bigger business because of where we're going. What I'm looking for Square is that same thing. What partnerships are they going to have that I think is going to take them to the next level? And that's the biggest thing for them. So can they partner with somebody that's Jack Dorsey, exactly. So I think he's going to start giving a lot more attention to Square as opposed to Twitter, because to be real with you, I think Twitter is about to hit a cap as far as just how big they can get.
Donald Trump was the best thing for Twitter. And people may argue with me, Twitter was going down. Before Donald Trump came in office, Twitter was not like, you'd hear people like, oh, I don't tweet. Oh, I don't tweet, Eric. I'm not on Twitter. Because Twitter was this thing where news was being passed through. But if you didn't like that type of news, or you didn't like that kind of feed, the way the page is, you wouldn't be on there. So all of a sudden, Donald Trump comes on there and you have 8 million people sign up. You can't tell me he wasn't a powerhouse changer for Twitter. Like, Twitter should have sent him a thank you card. Instead of the ban, right?
Yeah, and they may end up letting him back on. But I trade Square with options, especially after COVID, because I know they were going to get a lot of usage. But my question is, I think now that they may kind of be topped out, and so what I'm looking for is that what's going to be the next catalyst in them, outside of maybe a revenue statement that can take them to that next level. And so I really think that's going to be a partnership with somebody, but I got to kind of see where the partnership is going. But I think Dorsey is going to start really putting a lot of attention on that company, because I think that's where the biggest growth is. And I really think Twitter, from a growth standpoint, is getting ready to hit a ceiling, and they're just going to be almost a plateau company, as opposed to a company that can keep growing, like maybe how Facebook had, or maybe even where people think TikTok is going.
Oh, for sure. So I'm laughing because Auntie said these companies need progressive thinkers. Victoria's Secret is still showing bony women. So let's keep it a buck. Bony women are the models for Victoria's Secret were always for the men's magazines. They were always for that. And the aspiration. We're a country of people who aspire to be something. We aspire to be skinny. We aspire to be, but what Victoria's Secret did is left themselves wide open to what? You go online right now, there's about 10 companies who are cleaning up millions of dollars a year for plus size lingerie. So that's all they did was leave the door open for people who could be their competition. That's okay. Like even with clothing stores, this guy said you go on the racks and there's nothing left but smalls and mediums. Well, okay. Well, we already know our society, 60% of people are overweight. Like that's not going to kick it. Thank you again for Crystal Montes for the $4.99 super chat. Thanks you everybody that's super chatting. Even if I don't see them, the stream is so much in the chat. I can't catch everybody. So my 2 cents on Square is Square revolutionized the flea market. Okay. Does that make sense? 2009, if you look at, and this is the 5-year trend right here, you guys, if you're looking at the map still, you go to the flea market, you had to have cash. Yeah. You go to the Hispanic flea market here in Austin, you better have cash. Well, they started having debit cards, right? They started having those swipe machines. They started having those merchant account, like, yeah, look at my merchant account. Well, Square came in and you plug it to your phone kind of mentality of like, oh, like I can take payments. And then I think it made it more real, right? Because let's be honest, I've had past clients, and there's no knock to them, but they still watch the channel. They had flea market companies making 70 to 100,000 a year in Georgia, in Florida, in Texas. And I had to fight them to get bank accounts. Okay. See, back in the day, I had child support, and then, I had this. It's like, yo, boo-boo, you're running a business. You have to get a business bank account. And this is where PayPal came in, right? Where people didn't think child support could serve to PayPal, which it can. We'll talk about that another time. PayPal and Square and these things came in where they could partner together. You could get your Square swiped and it go to your PayPal. And so a lot of these guys who were these off-market kind of guys could get their money. Because you're like, oh, I don't have cash, I have a card. No worries, I've got a Square, right? Even my sister does hair braiding, and at her shop, I remember the change. Like they'd be like, oh, something's wrong. I don't have cash. I don't have enough cash. They put a little ATM machine in there. Okay, well, that didn't work no more. They were like, okay, here's the swipe. You can swipe right now. Right? And so even hair braiders were like, no, you ain't going to play that with me. You're not going to play that you ain't got no cash or your debit card ain't working. Right? Yeah. You got to come in here with something. Right? And so I think Square is important. This part right here makes me a little nervous, but it is what it is. We can, again, look at these charts. There's a whole, you can go technical with Terry, you can go technical. There's several other people, but I think Diamond Dave does a really great job in his course kind of teaching the fundamentals, and you guys can see some of the things that people are missing out here. Yeah. What's my other one? Let me see. But give us some thoughts on what you're going to see for February, the Black History Month, February.
I mean, what we want to see is, and what got ignored with all this stuff with GameStop, and I don't know if it was deliberate, but it was very convenient, was you had a lot of companies put out earnings, and the response to their earnings was not really positive. Mm-hmm. So Apple did a ridiculous amount of money on earnings, and they sold off. Mm-hmm. Tesla missed earnings, which I knew they were going to do. I should have had a contract on it because the last two earnings, Tesla sold off after earnings. Mm-hmm. Tesla didn't have a great earnings. So Tesla got inducted into the S&P for so many consecutive quarters of profitability. And then the first quarter for earnings after the S&P induction, they didn't have a great earnings. So what we want to see into the future is that what I'm looking at is drug companies still looking at Tesla. Mm-hmm. We know Microsoft is going to be stable, looking for Apple to rebound. Facebook is fighting with Apple over mm-hmm. Apple not allowing tracking for their advertisements. Mm-hmm. Can they rebound from that, or is that going to be something that they're going to have to deal with permanently?
I think I think it's a big blow.
You think? What'd you say?
I think this is a big blow. You will not spend money as a company if you can't track it.
Yeah, Zuckerberg got in his feelings behind that, so I know it had to be a big deal because he really talks about anything. Mm-hmm. So are they going to be able to rebound from that, because Facebook was on their way to 300? And so what I'm looking at primarily is that how the drug companies are going to deal with vaccine rollout, mm-hmm. and then with the FANG stocks, how are they going to deal with this new quarter? And then also, is Tesla going to continue to sell off, or is it going to rebound and recover and move towards 1,000? And then also what I'm looking for, and I want to tell everybody to watch this year, is Amazon going to split this year? Because if Amazon splits this year, that stock is going to go crazy. So is Bezos going to just keep letting Amazon go to 4,000 and past that? Or is he going to say, well, you know what, let me do a stock split? And that may happen because a lot of these big companies may get attacked for being monopolies. And one way in which they may try to guard against that is to split it, lower their share price, and allow more people into the door. Because Amazon at 4,000, the average person can't afford to buy that.
No, they can't.
Yeah.
I mean, and that's the argument too, is like Wall Street versus Main Street and all this stuff. And even though, and listen, and I know y'all get sick of me talking about Trump. Trump was just a symbol of a system, right? He was just a symbol of like a part of America, which is a major part. Like, hey, like even when he was running, he was like, oh, it's a big fat ugly bubble, because it's not inclusive. If only a few people have this money moving on Wall Street, and it's a bubble, well, only those people are getting, but we have to pay for it. There's a problem. And so I love how like this is an opportunity for the American people, like, oh, y'all want to play with our money over there? Oh, we coming over there. Right. And I just love the mindset of it. It brings me a lot of joy. But this is Amazon's 5-year. Wait, did I change it to 5-year? I didn't. This is Amazon 5-year. Can y'all see that? Amazon 5-year. So it's been steady rocking up. Here is Advanced Micro Devices.
Yeah, AMD.
Give me some thoughts.
AMD. I mean, another buy and hold long term. Mm-hmm. They are out competing their competitors. Mm-hmm. And so as opposed to a short-term trade, I would just look to buy and hold this long-term. All the tech stocks, any tech company that is halfway decently managed, I will be bullish on it for the future. But if you're a tech company and you're not managed well, you're going to get attacked by shorts. So same thing with AMD. Good management, good fundamentals, and also with Yahoo, you can go and look at their financial statements relatively inexpensively or relatively free and kind of understand how they're managed. Look at their revenue statements over the past quarter. But any tech company that is halfway decently managed, you should be bullish on their projections for the future. And any tech company that is not well managed at all, they're going to just contract and just probably go away in the next few years.
Man, y'all, if you could understand the conversation I have with people about management, everybody out here got a little bit of money. That's how I say it. And I'm gonna run out and go get a truck. I'm gonna run out and buy somebody else's business. I'm gonna run out and do this. I'm gonna run out and do that. If you don't have good management, if you don't have good systems, you will be bankrupt. You will go out of business. And a lot of people are like, well, Erica, you doing all these things. No, I literally purchased like $76,000 in education, training, and systems. Like I'd say it was 2 years ago now. And then this year, we've already got our people scheduled, the people that still work with me, some of my contractors on staff, some of my VAs overseas. We are scheduled for $20,000 more this year in training and systems. Because if you notice that these bigger corporations, and people can say what they want about corporate America, the reason some of y'all can leave corporate America and start a business is because you learned the systems at corporate America. The reason some of these companies, like the reason, and we can go or whatever with this, but Samsung got sued by Apple because an employee from Apple bounced Apple and went to Samsung and took them ideals. Samsung didn't send no spy over there. It was an employee that you fired, that got fired and went over to another company. So what you guys have to understand is you're getting training at these bigger companies. And so when you see these mom and pop businesses, or you see these one-off really cool YouTubers or superstar businessmen, it's the systems that keep you up. It's the training, it's the management. And this is something, instead of people trying to sell you, just get your LLC and start a business, get you some training. That's the biggest part I want y'all to understand on that whole thing. Let me see.
And I want to say real quick,
go ahead.
Is when I'm looking at a company from a financial standpoint to evaluate it from a management standpoint, one of the things I'm looking for is revenue quarter to quarter. Is it going up? Is it going down?
Mm-hmm.
What is operating income? What is the cost of their doing business quarter to quarter? How much debt is inside the company? Is that going up or going down? If they're adding new debt to the company, what's the justification for adding new debt? What is the return on assets? What is the return on equity? Because you want to understand that, how is management utilizing the capital that is being infused in the company, and are they getting a good use of it? So if you're buying equity in that company, what is that return on that equity going to be? And we're living in a world now where 20, 30 years ago, you had to try to get that information by filing it to the SEC and then waiting for them to mail it back. Now all of that stuff is on the internet. So it's very easy for you to understand now how to evaluate a company, especially long term. And from a fundamental standpoint, you want to kind of get away from the headlines and go into more of, based on the financials, how are they managing the company? So you start looking at balance sheets and statements and things of that nature, not just to say, well, this headline came across the screen, and because of this headline or because of what I think they're going to do in the future, I think this is a good investment. When you're looking at management, a lot of times prior history doesn't always predict future results, but it gives you a good understanding of what kind of people that you're dealing with.
Right. Carissa said, I only work for a company to learn how to do business. Exactly. Someone asked, do you know if it's possible to transfer stocks out of Robinhood if some margin is being used without selling? I know when you got margin, they're not letting you transfer like that. I think it's when you just, without margin, you can transfer. Because they want to make sure they get their money. There's a difference between telling others what you own and telling others to invest in the companies they don't know, for sure. And this is, again, people have to educate themselves. This is why we're doing this video. But also, I mean, what did you say? That's why all the Latinos do have nice trucks. Stop it. Amazon needs to remain expensive. Keep that stock trading normal. Yeah, I mean, it's possible. That could be a good answer to it.
But if they come after him with, because if you look at what Amazon's doing, they're just dominating the market. And he may try to guard against that by essentially saying, well, you know what, I'm going to kind of like democratize the stock price. Because if Amazon has a company that they have and they're $5,000 a share, it could be an issue.
Answer this and we'll go to the next one. Senator Herbert said, I may be late, but what about water ETFs and individual tickets?
I mean, like I said, with water ETFs, look at what the ETF is composed of. What is going to be the return? Does it give out, what is the return on that ETF year to year? Is it a new ETF so it doesn't have a really long-term track record year to year, but know what you're investing in and then know what companies make up that ETF. So don't just jump in the water ETFs because like that's the hot new thing, because it maybe make more sense for you to buy a Vanguard ETF that already has a track record of a certain amount of return per year. Yeah.
Okay, so the ones I really wanted him to, and this is what I think. So Kodak, everybody knows what Kodak is, right? Like Kodak cameras, Kodak film, Kodak, but Kodak services is something that's been popped up lately because this is their 5-year. They've been running at $9 forever, but this week they had that 164. But what I really want your thoughts on are Alibaba.
Okay.
Because China's got some mess going on right now.
Okay.
But go ahead, you kick it off.
Yeah. So, I'm first thing, if you're buying stock in any Chinese-based company, you're not buying the stock. You're buying into a shell company that most likely is going to be based into the islands. So when you buy into Alibaba, you're not actually buying into Alibaba. You're buying into a shell company that I believe is based in the Cayman Islands. And the reason for that is that the Chinese government is not going to let foreigners own anything inside their company. They're not like the United States, where we let people come over here and buy real estate and things of that nature. They're not playing that game.
Yeah,
they're not playing that game. So really, that's what you're buying. So you really want to understand is that you don't really own equity in Alibaba. My only concern with investing in this company, outside of the fact that you don't really own the company, or you don't really have equity in Alibaba, is that if the CEO of a company can disappear for 90 days, 120 days,
honey,
that's an issue. So when you have a CEO, not only that, but he's also the CEO of the Ant Group, was supposed to be the largest IPO in the whole world. And then because of some discrepancies he has with the leader of the country, he just has to essentially go on house arrest or on ice or whatever was going on with that guy for 120 days. You got to be concerned about the stability of that particular company. And also with him being a member of the Communist Party of China, he has to be loyal to that. And the Communist Party of China is almost like the military. So I've had a lot of people in my family in the military, especially the Army. You have to always put the mission of whatever you're doing before your own individual situation. So him being a member of the Communist Party, they're taught that whatever the Communist Party is trying to do is important, and whatever you're trying to do is not as important. And so if they decide that getting rid of Jack Ma is not as important as something else, then they're just going to get rid of the guy. So Alibaba is situated to be a really, really strong play in China and also internationally. But I would be worried about investing in a company to where, because of his relationships and because of the government of that country, they can just make this guy disappear. And that'd just be the end of the situation. And you saw that with the fact that he had been essentially incommunicado for so many months. And he's the CEO of one of the largest companies in the whole world. And I want to say, I thought he was the richest guy in China. So if the richest guy in China can just be made to disappear, you got to ask yourself, do you want to be backing up whatever he's involved in? Because who really has the power is the people that can make him disappear.
So and this is where, there's that. I'm gonna tread light, but we can do a whole nother show on that. But this is where I want you to understand that China only went capitalist because it kept it up. If you look at any other communist country, they basically are on life support.
Exactly.
Because it is a failed ideology. Yeah. So you have China who's like, yo, we have more people. We got to feed these people. And this company comes out of nowhere and is just killing it. And Jack Ma runs his mouth and says, well, I'm moving to America. Let's go ahead and grab you. Let's go ahead and let's go ahead and have a conversation with you for the next 90 days. And this isn't the first time. It won't be the last, but America can't do anything about it. At all. Something happens tomorrow, it doesn't matter. We can't do anything about that. It's not our country. Also, the fact is, and I'll tread light here, but there were 2 Chinese American born here in California, going to Stanford, the other one going to UCLA. Their father's a businessman over there, and he was trying to come on out of China and come to America fully. And his kids went over to visit him because they got an email from him that he's sick. They go over there and basically their passports are held.
Yeah.
They've been there for 2 years now. Chinese groups, embassy groups, everybody said, hey, China, could you send the kids back over? Come, that's a little bit much, China. Just go chill out, China. Those are Americans. We're not even gonna buff on China on 2 of American-born people. Jack Ma better shut up. He better stop talking about moving to California. It ain't happening. He's not moving anywhere. I think this was a hold to stop him from moving to Texas, or because they're building all kind of warehouses here in Texas. But yeah, if you want to be scared a little bit, just for a second, go read some of this. There's a couple other Chinese billionaires whose children have been called home and they don't get on the plane. And if you don't believe me, go Google California's Chinese millionaire children. There's a reason. Okay. But that's what I really wanted you to talk about Alibaba, because I'm like, y'all, you might want to check that out. So here's 2 that I thought are pretty good. Again, we talked about AMC already. If you missed it, review back the channel. Erica Williams, what are your thoughts on cannabis sector? Will it be treated like Budweiser plus tobacco or pharmaceutical? I have a thought process, but go ahead and you let me know.
Okay, so, and I like that because I got a guy in one of my groups. He's really bullish on cannabis. So this is my issue with it. I was going to go into the cannabis sector, I want to say 08, 09 when I came out of college. I was going to go to the West Coast and get into the medical marijuana industry. I remember my family talked me out of it because it was still federally illegal. And they was like, you're going to end up in federal prison. We're dealing with an administration of 2 people that, to be very frank with you, locked a lot of people up. We're assuming that they're going to be bullish on cannabis, but it's not yet federally approved. So what we're seeing is that the cannabis sector is very bullish now because of anticipation of legislation coming down to where the gates are going to be open for the cannabis sector, but it hasn't happened yet. So you're still taking a gamble until the actual announcement happens that the federal government is going to decriminalize or they're going to just legalize cannabis federally. And what I want people to understand, people that have never really moved around a lot, like you got to realize that the federal government after you is a totally different issue than having your local state or your city police after you. So a company that thinks that they're going to operate inside the United States in cannabis, if the federal government doesn't want that, then it's not going to happen. So you can have individual grows in places like Denver or California, places like that. But to think that you're going to do interstate commerce, things of that nature with cannabis, and the federal government's not on board with it, it's just not going to happen. No. So what I would do is I would wait until the federal legislation actually changes, because if that actually happens, well, then that's going to be valuable for the rest of our lives, as opposed to taking your capital and gambling, trying to get in early, right? Hoping that the legislation comes down, because you're not going to be able to take a product that has marijuana in it and move it across state lines if you don't have it federally regulated, or you have the ability to where it's been decriminalized federally, because you're going to have an issue with the federal government. So my advice, and this is not legal advice, this is not investment advice, just my own personal perspective, I'm in a wait and see position. What is the Biden-Harris administration going to do? Because their past history when it deals with criminalization means that they're very hard line on putting people in prison, both of them. So I don't know if they decided to not be that kind of person, or they're going to continue down that road. And this is an easy way for them to get a lot of people locked up, because even if the state says you can deal with marijuana, that doesn't stop the DEA or the FBI from coming into your operation and just putting you in prison. I don't think a lot of people really realize that, because they never really dealt with the feds. I'm from a city where the federal government used to run into the city, snatch people up, and pull them out of here. And they can do that because they got the federal law to back them up. So I'm going to wait and see with medical marijuana. I do believe that eventually they're going to get a partnership with an alcohol company to where it's going to get legalized. But until that happens, I'm not bullish on it at all. I'm very bearish on it. And I think it's a wait and see situation.
For sure. I will say this: vices always win, but what we're coming up against, and especially with Trump, I'm gonna just say this. I know y'all hate me talking about him all the time. You had in the past 5 years, and you go look this up, this is public knowledge, Past 5 years, white women going to prison, 50% increase.
Mm-hmm.
And not no little jail sentences like, oh, she had some weed in her pocket. Fed time, marijuana, trafficking, pills, trafficking from Florida to the north, pills, fed time, to the point that you had 162 cities in the north say, oh, we're not arresting people who are on opiates. We're not arresting. This would not be the case. If I encounter you breaking in a house and you on opiates, me saying I'm gonna let you go home, that's not normal. Okay. So what I see happening, and I went to a couple conferences, is we will try to find a way. Insurance companies pay millions a year in rehab centers.
Mm-hmm.
Right. And you can go on American Greed, one of the black guys, he had a whole thing going on with the rehab centers there. But we will pay for people to be on methadone via insurance and via our communities. What can we do to move? There's somebody somewhere, again, everybody's like, this conspiracy, trying to figure out how can we get medical marijuana to be under that list of treatments for people, and it'll be covered by insurance. And then that's when there's going to be a lot of relaxed on the government side, because the insurance companies can make some money off of it. Like, people really underestimate how much money is in insurance. If you doubt me on how much money is made in insurance in this country, go check out the fact that John Henry Styles and several other, they made a bunch of money on social media, and now they're like, well, I'm getting ready to start an insurance company.
Okay.
See, people don't leave something that's a moneymaker to go do something that's less moneymaker. That's not how business works. So you've got about 5 to 10 of your biggest social media making millions of dollars on social media, making millions of dollars with private capital venture firms, all starting insurance companies.
Yeah.
So I always tell people, follow the trail. Why are these young in their mid-20s starting insurance companies? I remember going to college with people who fathers own, franchises of, I'm just trying to be careful. Farmers farm, the farmer, state farmers or whatever, and a couple of their branches. Well, they went to college, goofed off the whole time, but knew they were coming back to what? An insurance job.
Yeah.
And the way insurance works, the top guy can peel you off some of his guys and throw them down to you. Okay, here, these are 100 clients now, and you're now their agent. So people had children, 5, 6, 7 children, all working underneath them from the hard work of the daddy, and peeled them off. Same thing goes in a lot of sales. Same thing goes in Edward Jones. You'd have one guy, Edward Jones. He's like, hey, here's all my accounts under $10,000.
Yeah.
Have them. I don't care about that. I'm looking for the clients with a bunch of money. Okay. So that's my 2 cents on that. And for people in the comments who are kind of going at me like, oh, you need all of them. Look at Sweden, Scandinavia. Please stop. We are not a homogeneous country. Please stop. Go read the book, Road to Serfdom. Everybody's like, well, we need communism. No, what you're saying is I need to be able to go to my neighbor's house and steal money out of their hand to feed this other neighbor. That's not going to work. It runs out of money eventually. Damn Daddy's like, wait a minute. Understanding management before you buy any business. This is true. Yes.
Yeah.
What's the other one? All right. I think I only got maybe one more. That's it. Anything you want to leave us with? Talk to us. Anything you want to leave us with?
Yeah, I would tell people, and I'm really enthusiastic because I think this GameStop situation has really exposed a lot more people to the markets.
Mm-hmm.
I would tell people to really start looking at how the markets can try to help them add to their life. We've been taught for years that this was a space just for like an elite group of people. Certain people had to go to certain schools and then get jobs with certain firms to even be allowed in. The level of capital that is a lot of times that these particular firms have, we talk about the Melvin Capitals, the Citadels, is so abnormal to the normal person to have a company that's managing $49 billion.
Mm-hmm.
And you don't necessarily meet these kind of people in your day-to-day life. And what I think is that we kind of think that we are disassociated and detached from this part of the world. And I think that we really want to start trying to figure out how can we get involved in this space. It's something I'm very passionate about. And to get people to see how it can be beneficial to their life goals. You talk a lot about real estate. My goal is to get income from the markets and to move that into real estate, but to use the markets as a way to really accelerate a return on my income so I can eventually get into the real estate game. And so I kind of think that we need to look, how can we leverage this space to get what we want, as opposed to it's just a space for those people to be involved in, and we don't really belong over there. And so I think that if we could take some of this momentum from what's been going on and figure out how we can get into the markets and get the benefits from it and not be scared of it, it can be very beneficial, but not only to us, but to our families long term.
So Diamond Dave, they would like you to tell us about your course, please, and tell them where they can find you on the internet, man.
Okay, so you can find me on the internet, Facebook, David Williams, YouTube, Instagram under Diamond Dave. And the course is called The Highest Paid Part-Time Job in the World. And what it's primarily designed to do is take people who are dissatisfied with the income from their 9 to 5. They're also dissatisfied with the amount of time that they got to steal from their family to service that 9 to 5 or to make that income. And to really teach them how to replace a lot of that income, if not replace all of that income, by being options traders. And so the goal is to get you to a $2,000 a month profit, and at least have that as like a foundation that you can build off of. And because I know that for the average person working in America, if you can get to $2,000 a month profit, which is over $20,000 a year, it'll totally change your perception of life, because you're not dealing with a lot of income anxiety. And one of the ways in which they control us in this world is through income anxiety. You're really worried about where your money's coming from, how it's coming in, and if you're ever going to have enough. If you have a $1,000 bill to fix your car, it can totally destroy your whole month based on the fact that you only make a certain amount of money, and that money's pretty much already tapped out before it ever hits your pocket. So that's the goal of this particular program. And one reason why I'm really passionate about it is that I was never really exposed to the markets until the last few years. And once I saw how we could change my life and it could eliminate a lot of my income anxiety, I wanted to know, how come nobody ever taught me this type of stuff? And so we got a goal of getting this out to as many people as possible. The goal for 2021 is 1,000 people. And so you can reach out to me about the course. You can reach out to Erica about the course. She can get you locked in. And I know that if you stick with me and you work with me, I can get you to that $2,000 a month mark. And then you just got to build up off of that. And there's people that are taking my course that are retired from their job because of the amount of income they're able to get into as an options trader.
I love it. I love it. Listen, I love when I see some people in the comments like Corey Martin's like, what are your credentials? Sir, I run $1 million companies. Not one, not two, but three. That's my credentials. I have over 150 people I've partnered and invested with. I've raised over $2 million in funds. I manage over $2 million in assets. That's my credentials. I've done over 6,000 paid phone consultations. Diamond Dave's retired people from their jobs. Plenty credentials. I get it. You want to know. I just want to make sure you understand. All right. And again, come visit my office in Austin. We can always talk. Okay. Anyways, thank you so much for your time. We still got to do the 48 laws of power combo. What we see out here in this wild world.
Let me know whenever you want to do it.
We got to have some silly with the fun too, so they can, because they love it. They love the red meat. But someone said they loved your course. They started last week, and he makes it easy to comprehend options. Thank you guys. Listen, if you're in his course, just drop it in the comments. That helps everybody when we see the comments. So
that's the goal. That's the goal. And really, real quick, that was the goal. We've been taught, and I learned this when I went to college, that they make things complicated to keep people out.
Yes.
And really, this is not complicated. It's very simple. The people in the markets, I don't care, how much capital they have behind them. They're really not smarter than you. But this stuff has been made to be complicated, to make you think you got to understand the Black Scholes model just to trade options. And it's really not about that, but it's designed that way to keep people.
Yeah.
And my goal is to get people in so they can start seeing the advantage of it, so they can go ahead and try to get what they want out of life. Because people, and I want to really quickly, this GameStop play has changed a lot of people's lives. And next 60 days is going to be another GameStop play. And it's just going to keep happening over and over again.
Oh, yeah.
It's because the market is designed to do this type of stuff. Yes, ma'am.
I love it. I love it. Thank you, Angel Alo, for the $19.99 super chat. Thank you guys so much for being here. Thank you for supporting the channel, being here today. We had over 1,300 people come in and out of the chat. I got to see the numbers on my little back office here. So listen, thank you, Diamond Dave. We will do another one. We'll probably do another stock one in maybe like 3 weeks or so. We'll see how some of this rolls out, and then we'll do another one. So I'm glad y'all like this. If you like it, when this video wraps up, put some comments underneath. Thank you for people saying they're just subscribed, Austin channel. Thank you so much. Thanks, Dave.
No problem. Appreciate it.
All right. Later.
All right.